Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we are going to be talking about Ripple and XRP, as well as the vast majority of crypto and finance. And with that being said, I hope that you are all having a beautiful day or a beautiful night wherever you guys are out there in the world. So do you guys remember this post from the beginning of the year? It was actually from Ripple. It's with Brennan Barry, the head of payments products at Ripple. And we have utility boom. In 2024, we expect that funding will rebound with a renewed focus on companies solving real-world problems and not centered purely around infrastructure. We're going beyond this and focusing on the utility behind the tech. There's recently been a major resurgence in payments, with crypto's democratization of finance front and center. While many have previously focused on the speculative, users are now moving back to the tried and true baseline use case: payments. Closing in on traditional fintech, 2023 saw increased interest in crypto from fintech companies, and according to Ripple's 2023 New Value Report, 3/4 of financial institutions are likely to explore digital asset services in the next 3 years, especially for cross-border payments. In 2024, we anticipate an increase in fintech plus crypto partnerships to close the gap between emerging and existing financial technologies to resolve legacy pain points. And we have fintechs must adopt blockchain and crypto to be successful in the year ahead. And we expect to see greater collaboration amongst fintech and crypto companies to keep up with the pace of innovation. And stablecoins. Stablecoins dominate outside of the US, while US dollar backed stablecoins have largely been leaders in the market to date. According to Chainalysis research, the majority of stablecoin inflows to the 50 biggest cryptocurrency services have shifted from US licensed services to non-US licensed services since spring of 2023. In 2024, we will see stablecoins from non-G7 currencies take off, creating a new entry point and gateway to crypto, providing exposure to currencies for consumers and allowing them to pay people and move money in real time. Now, what's interesting about this, right, is this was like right at the end of 2023 when this report came out, or when this post came out in terms of this prediction. What I find funny about this is where we are currently at in terms of institutional adoption. There's a great post made by Smoke Dog on March 30th, and we have Q2 2024 institutional investor presentation highlights tech disruptions and payment industry timeline. 2024 to 2025, DLT and cross-border payments, ISO 22 adoption, and CBDCs. All by or before 2025, their plans and where their focus is currently at. And here we have investor presentation. Over here, we have technology disruption, waves, and convergence. This is where we are at today. And this is the timeline in terms of capital markets, health tech, TMT, insurance, retail, CPG, payments, and also mobility. It is only going to continue to converge and really grow and grow and grow. If we go over here, we could also see the payments industry trends as well. Again, currently speaking, when we look at the now and when we look at 2025, in between there's a lot of things changing. We're starting to see crypto wallets, cross-border payments. We're starting to see closed loop payment ecosystems, free acquiring, instant and digital issuing, request to pay, DLT and cross-border payments, biometric payments. There's so much to really kind of focus on this, and this goes all the way to 2040 plus. But regardless, right, we are now starting to see the big push, and it's all based around payments. Look at how many mentions of payments there are on this slide. This is why when we read this and we really look at the payment space still being the big focus point, it is one of the biggest use cases that crypto does offer. Now, outside of this, there was also a report made by Coinbase, actually, and this one I found very interesting. So we have 2024 crypto market outlook. The total crypto market cap doubled in 2023, which suggests that the asset class has already exited its winter and is now in the midst of a transition. What are the key themes to expect in 2024? Now, again, this is a great report, but the key takeaways here are the ones to really kind of look at. I'm not going to download this report. I'm also not going to read through all of this to really kind of bore you guys to death, but we have the key takeaways. We believe institutional flows will remain anchored on Bitcoin at least through the first half of 2024. helped in part by pent-up demand from traditional investors seeking to enter the market. We believe that 2024 will provide favorable macro tailwinds for risk assets, and perhaps more critically, that the foundations for crypto regulation will continue to be built, facilitating long-term adoption. We believe developers will continue building towards real-world use cases, the foundations of which are already evident. We believe that the groundwork for a better crypto user experience is being built, which will help the industry across the chasm from early adopters to mainstream adoption. So basically what this is talking about is that, institutions are here. They are looking into what outside of Bitcoin is the next big thing. You could argue Ethereum, sure, but I personally look at where is all of the money going to be going? Well, it's going to be invested and tapping into utility. That's why when we look at this, right, the initial focus is utility boom, because I do think that we are now starting to change a little bit. Yes, when we look at meme coins are still a big deal. We know that meme coins are obviously still making a ton of noise, and we still know that they are around, and it's hard to not see them, right? But I do think that the market is changing. And I said this back in January as well, when we started to see the ETFs really kind of be talked about. I said I strongly believe that we are starting to move away from the speculative market into a much more mature one. Let's talk about it real quick. Recently, we saw Jay Clayton discussing Bitcoin spot ETFs. His overall view was that during his prior tenure at the SEC, there was far too much wash trading and illicit use of Bitcoin to have an ETF. Now, apparently, Bitcoin is safe even after Elizabeth Warren and Jamie Dimon were saying the opposite. Confusing. The significance of the ETFs is not the money that will come from it, but the reputation. We are now seeing, for the first time in history of crypto, traditional financial giants coddling Bitcoin. This definitely goes against the original idea of Bitcoin and crypto, but it was inevitable either way. Leaders from this space, especially from Ripple, predicted this is the year institutions really start taking crypto serious. Regulations and standardization is what I'm really focused on at the moment. Singapore, UAE, UK, Hong Kong, Japan, Europe, hell, even the US is now moving in on some substantial bills for crypto or progressing heavily. Mika is a big deal. I just recently talked a little bit about it in a video, saying that it is an accelerator for all regulation around the world. Definitely is a big focus. It would be a bad decision to avoid the key factors and rather be distracted by just what the ETFs do short term. Remember what the ETFs really are, a welcome mat for the Web2 retail herd. We witnessed Larry Fink and various other TradFi leaders practically spotlight tokenization as the biggest thing in the history of tech on mainstream media. I reported on the giants already tapped in on various fronts regarding this, as well as like Hedera with Aberdeen, or even Stellar with Franklin Templeton, and these are just two of many. We are starting to see the flood of institutions and enterprise players jumping into the space. Reports are coming out from names like Citi, mentioning the keys to mass adoption. They are all aware of what is coming to the world of crypto over the course of the next few years. This will be bigger than the internet, and it will truly transcend every single innovation in history. Notice how I didn't even mention the convergence of blockchain and AI, which will accelerate this even further. At the end of the day, the ETFs are the beginning of what's to come for crypto. Institutions are embracing the market for what it really will become, a breeding ground of incredible innovation and wealth creation. The key for the retail sector was to be positioned and be positioned before it really is too late to be early. I'm not focused on prices at this point, and I surely don't care what happens next week or next month. I'm looking much further ahead. This is the biggest opportunity we will ever have for the next probably 10, 20, hell, who even knows how many years. Don't waste it. And again, I do think that this graphic over here is really kind of showing you how early we actually are. I mean, technically speaking, we know how crucial this technology is to tap into information in a transparent and secure way. And we know that all of that is crucial for the next big moves to be made around payment technology, or even again, if you believe in the quantum financial system, which I do think that there's a lot of things behind it to really kind of look at, research, and understand as well, because we are starting to see technology really rising around the QFS system. But regardless, a lot of this is so crucial. I mean, if we're looking at, payment technology, crypto is there. Crypto's at the forefront of that. DLT and blockchain is also a big deal for AI. Automation, automated workflows, digital workflows, streamlining everything, you still need blockchain and DLT. That's why I look at this as like one of the biggest opportunities for the next 10, 20, 30, 40, 50, who knows how many years. Now, In a recent video, I did talk about how Brad Garlinghouse was predicting $5 trillion by the end of 2024 for crypto, right? But imagine this, right? $5 trillion is the target by the end of this year for an asset class that is barely fully adopted by institutions. It's barely adopted by, the retail crowd. Imagine where this market will go once utility is fully focused on. This is where I look at crypto being a $50 trillion to $100 trillion asset class eventually. If we're looking at tokenization, right, imagine how much money will flow through this space on a day-to-day basis. If you are looking at just real estate, right, imagine just global real estate, the market really kind of, tapped in on chain. We'll just say 1% of it. Guys, that's $3 trillion. 10% of it is over $30 trillion. This is an asset class that is already being tokenized. It's already being disrupted by tokenization. But then you look at everything else around tokenization as well. Outside of just real estate, you have equities. You have, the sky's the limit. Let's just put it that way, right? Because that can go on and on and on about tokenization. Utility is going to shine so bright over the next couple years. I really don't think people are realizing how early we actually are and how big of a deal this technology is. Long term, this market is going to give you incredible opportunities. In the short term, we make our money, right? We take our profits. We make sure that we are paying ourselves. We make sure that we are, fully debt-free, living a stress-free life. That way, we can appreciate this space. We can make sure that we are still tapped in and a part of the next big wave to the upside, which is institutional and utility adoption. But there was a great video posted by 707 Crypto, and it's actually the Standard Chartered CEO. Now remember, Standard Chartered has been tapped in with Ripple for a very long time. We have a much more interesting role than a crypto market is a role for a digital asset marketplace. Check this out.
I do think that there's a role in the world for a well-regulated, well-run cryptocurrency market. There's a much more interesting, from my perspective, role in the world for a digital assets marketplace. And the difference between the two, of course, is cryptocurrencies are not fiat currencies. They're not controlled by central bankers or issued by governments, and the value is a function of what people are prepared to pay for it, not what's the fundamental value of Bitcoin. Who knows? Even with gold, we can say what's the fundamental value of gold. And ultimately, at some point, it's going to end up on your ring or on your finger or on your ear in some markets. But Bitcoin is not going to end up hung around your neck anytime soon, I don't think. So I have no idea where the price of Bitcoin is going to go. I think there's a group of investors who think that cryptocurrencies have an interesting place in an investment portfolio. There's another group of speculators who like to speculate on anything that moves around a lot in price. That's okay as long as it's done in an appropriate way. And the infrastructure implosion that you mentioned with FTX implosion, people going to jail, etc., are indications of market failures or regulation failures or legislation failures, bad behavior that don't detract from whatever the underlying value of a cryptocurrency is. I'm not too focused on that, to be honest. Importantly, the infrastructure to support cryptocurrencies is the same as the infrastructure to support the whole other range of, let's call it, much more obviously societally useful digital assets. I'm not saying that Bitcoin's not societally useful. It's quite controversial whether it is or not. I don't much care. And I think anybody that's buying or selling should have responsibilities to buy and sell responsibly, and we should have the mechanisms to make sure that they comply with the law.
Now, there's also another great video clip continuing this discussion, and this one's only 30 seconds long. We have crypto ventures flooding into institutional players. Standard Chartered, check this out.
And to the extent that we're involved with any of those things, and we are with Bitcoin or with cryptocurrencies, part of the reason that people are flooding into our ventures around cryptocurrencies right now is because we're institutional, because our compliance is unquestioned. And criminals don't come to us because they're not going to get an account. But people who are using these things for the right reasons, they're coming to institutional players like us, and they're leaving the places that were a little bit Wild West. And that's the way markets evolve.
Now,
and to the extent that
again, when we think about this, Standard Chartered has been behind Ripple for a while, and even they are saying, like, we're now starting to see major flooding coming in because they want to tap in to crypto through institutional players as well. This is why we look at what Ripple has been focused on for a little bit of time, which is providing institutional custody, institutional, solutions. We're now starting to see the bigger picture here, which is, yeah, there's a lot of garbage in the space. All of that is noise. If you can dissect the space and pick out the actual legitimate players, you will be just fine. You will be fine. I get it, right? Short term, we hate to see the price action so stagnant, but today's prices are not tomorrow's prices. And when I say that, I mean, when we look at this space right now, what you see on the screen today in terms of prices on CoinMarketCap or whatever, those are speculative prices. We haven't even scratched the surface of, institutional regulated utility prices. That's when everything changes around the space. And we could still be months away, we could still be years away. But the big focus here is that institutions are now taking this space seriously. They are now seeing the value behind the space. And all it really takes now is for one institutional player to tap into the underlying tech and utilize it properly. Yes, BlackRock is already exploring tokenization, but they're not in a way that you think, right? They're not, pushing massive transactional flow every single day. They're not offering services to all of their clients outside of Bitcoin ETFs, of course. When we start to see major solutions being pushed on the clientele from these names, that's when things really get interesting. Now, outside of this, there is also another great post by XRP Drops, and this is Brooks Entwistle from Ripple. And we have, it's great to hear Ripple's Brooks Entwistle explain that XRP is being utilized in several corridors in partnership with Tranglo. Check this one out. And we have the big money is coming. See the post below.
Transition and segue to why we're so excited about the Tranglo partnership, because a product we've developed called on-demand liquidity, ODL, is the ability for this process that we've been describing of transferring money across borders to speed up, to have the costs come down, the security be about as good as you can have it, and be something that's even environmentally friendly to do it. And so we feel very strongly about this. And one of the things that we're going to work closely with our partners at Tranglo on is developing that across corridors. So if you think about ODL and the notion of transferring money, say, to the Philippines, which is one of the first corridors that we're going to work with Tranglo on, among several to come, it is a much quicker process. So the notion of transferring local currency into XRP, and then XRP settling across the ledger to another jurisdiction or country and immediately being paid out. The friction that takes out of the system is incredible, and we think is the future of how money can be transferred quickly. And Jackie and the team, and our teams are working closely daily with steercos. Our teams are synced up, making this a reality. So we're very excited about where these use cases we've been talking about go in the future around ODL. And it does make it very interesting. Yes, we're talking about remittances and consumers, but clearly small businesses moving money across borders, there's also very compelling arguments there as well.
Now, remember, right? This is utility. Institutions are here. They are noticing what these companies have built. And when we look at Ripple, right, they have a massive network of institutional players already behind them, ready to tap in when they want to. Standard Chartered is one of them. So when we're hearing the CEO from Standard Chartered literally telling you what's happening and how we are looking at a much larger role around crypto becoming the spotlight from institutional players, you really look at who have they been working with for years and years and years. Remember, Standard Chartered has been with Ripple for a very, very long time. And these are just some of the names. You have Bank of America, Standard Chartered, Santander, Neom, SEB, MoneyNet Int. These are just a few names, guys. There is so many names behind Ripple in terms of banking and financial institutional clients. For the longest time, they didn't mean much to anyone, right? Because they were just names on a screen. But now we're starting to see things changing in the way that institutions look at the space. They want to invest, they want to utilize, they want to, really be tapped in with legitimate utility, strong actors in this space that have been around for a while that are providing utility and value. And remember, it's value-added services. All it takes is one bank, like Bank of America, for an example, to utilize on-demand liquidity for their clientele. And guess what? They now become the dominant force on the block. Why? Because every single client, anyone out there that values money movement the way that Ripple is doing it will be utilizing that product. Why? Because it's cheaper to move the money, it's faster to move the money, and it puts a big spotlight on competition. Once you have one bank, that's it. They're all going to try competing because they all compete the way it is. You have a better service, you bet that every other bank is going to try to tap into that service as well. And this is where the big flood happens, where everyone wants to utilize Ripple. They want to utilize RippleNet and on-demand liquidity with XRP. And that day is coming, in my opinion, where we start to see a large flood into the Ripple network. But we don't get there without regulations first. We need regulations. And it seems as though 2024 is the year for regulations. It's the year for institutions. The big money is here. The big money's coming. Get ready, because things are happening, and things are happening very, very fast. We even have down here that this is from Brad Garlinghouse. I'm very optimistic. I think macro trends, the big picture, things like ETFs. Here we have, I've been around this industry for a long time, and I've seen these trends come and go. I'm very optimistic. I think that the macro trends, the big picture, things like the ETFs, they're driving for the first time real institutional money. And yes, the big money is here. Pay attention to the big focus point. Pay attention to the timeline. Payments, payment technology, standardization, it's all happening this year into 2025. There's not much after 2025 besides, payments in the metaverse and stuff like that. It's all happening this year into 2025. So focus on the big picture. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on for more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.